Hello, my favorite traders. Today is Wednesday, August 17th, and what a day it has been. Today, the FOMC meeting minutes were released, and I completely missed it. I normally every week I look on the economic calendar to see what releases are coming out, and if there's anything that I need to be aware of. And for some reason on my calendar, I completely spaced. I missed it. The FOMC meeting minutes that came out are always something that you need to be aware of. And if you're in a trade or you're planning a trade, you should be aware to just basically sit out at that time, because I will show you what happened to me when it occurred. And price was moving so fast, I basically lost my mind in that time and blew out all of my good trading that I had done during the day. So always be aware of any economic news or events that are going on that may affect the market. And I'm showing you my chart on a weekly basis right now. So we have this nice move up, and right now for the week, it's shaping up to basically be a doji candle. And unless we can keep above 43, I would say 43.30, we might see another pullback, but that's just something that you have to be aware. So always zoom out to other time frames to get a bigger picture. So let's look at the day. Here's today. It's a huge, not a huge, but it's a solid bearish candle that has set up on the day, which could mean we could see a leg back down. Let's take a look at today's activity on our lovely 5-minute chart here. Actually, let's do it 1 hour, and I will show you my beautiful drawings here so you can see everything in gorgeous Technicolor. So on the right, what I have opened up is simply a indicator on TradingView that shows you the volume profile, and it shows you this by horizontal level. So it shows you it's basically the volume profile, but it's horizontal instead of vertical, which is super helpful because then you can see the levels that price has been trading at and where the bigger volume levels are, and where the lower volume levels are that price would just kind of fall through. So really we see that what happened overnight was we took a massive dump down. So the Globex high was 43.15. Yesterday we reached up to 43.27.75, but then after hours we pretty much just kind of balanced out. Then we took a nice massive dump down here to about 42.65.25. So let's get into the 5-minute chart, and I will show you my thoughts on what happened. And you can see here that if you look to the right, you can see all of the trading volume. So the biggest trading range is this 42.83 all the way to 42.65, where we have the most volume happening. So what I decided to do, since today was such a major doozy of a day, I mean, it was a complete dumpster fire of a day. I'm not going to lie. I'm going to be completely honest, as much as it hurts. So I decided that I was going to implement a new thing this month in addition to the small account challenge, where I'm going to do a daily trade report card. And I got this idea from Lance Brightstein, who is an 8-figure trader. He is simply amazing. I think he's on Twitter at the one Lance B. Um, but he is a phenomenal trader, and he advocates doing a daily report card that pushes you to kind of identify the most important aspect of your trading and also helps you increase mindfulness and awareness and reflect on each trade you take. So my temperature today was I was feeling pretty good. Um, my goal that I really wanted to work on as I reviewed my trades for the past week and the past 2 days, I realized that I was getting out of my winners way too soon. So my goal for the week what is to hold trades longer and not close out profitable trades too early. Um, so I can really capitalize on those winners. So my goal for the week was to work on holding my trades longer. I don't want to close out on my profitable trades too early. I noticed I did that in several instances of my trades, and I really missed out on trades that could have been really good winners. Um, and the other thing that I wanted to kind of remind myself is that there are endless quality opportunities in the market if I'm patient and I'm selective in my trades, which is one of the reasons why I decided to do the small account challenge, because I really want to get things working on a small level. Then I know I can then size up. But if I can't get things working right on a small level, um, then I really need to take a step back until I can. And then and only then can I actually size up without destroying my account. So, one of the biggest fails for me today was that I didn't realize FOMC was happening. The minutes were released, and even though the news was very bullish or dovish, um, we failed. The bulls you can see here failed to sustain the 4,300 level. So even though that news was really good that came out for the market just is not having it. So we could be setting up for another pullback or another leg down, but we're going to only trade what we see, and we're just going to trade the chart and not make any predictions. We're just going to react. And the thing about the report card that I mentioned earlier that's going to be really helpful is what Lance does in his report card is he divides up the report card into sessions. So we have the A session, which is 8:30 to 10 o'clock. I'm on Central, so I'm an hour behind Eastern. Then you have B session, which is 10 to 11. Then you have C session, which is 11 to 1 p.m. And then you have D session, which is 1 p.m. to market close, 4 p.m. So the other thing is he also advocates doing the 3-2-1 method. So 3 highlights, 2 lowlights, how you can address them, and the top lesson going forward. So my highlights were I'll I'll share those as I go over the trade recap. So today in trading, I pretty much my plan was to wait for us to flesh out, and then I thought we were going to take another leg up and pretty much move up. But I completely missed that we had FOMC, which was creating really low volume trading conditions that I did not pay attention to as much as I should have. So you can see down here, here's the volume bars, and you can see these volume bars just get really low until the 1 o'clock hour where FOMC happens. So let's get into these trades and I will recap with you. So one thing that I did today was I took a lot of trades, which is why I'm not doing the actual live replay, because you would be sitting here for an hour and I don't want to use your time like that. I took 46 trades today. So today I took 46 trades. I had $308.75 in profit, and I had a loss of $743.75. My win rate was 21%, 21.74%, which equated to about 11 winners. And actually, we could do this 10 winners and 25 losers. I had a couple scratch trades that did not appear at all. But these are my stats that you can see, and I'll show you what I did. So I got in here at around 9:06, thinking the market was going to reverse. I thought we had flushed down since we pretty much at 8:30 we ran up, and then we came down to the 42.70 level. So I thought we had pretty much flushed down since we stayed at that level, and it looked like we were heading back up with a slight pullback. So I got into this first trade here, right here that you see. I got into that trade at around 42.8150. It was slightly profitable. It went up about 4 points, and then I stopped out for break even on this trade when I saw like this is no good, this candle, it's going to basically reverse, and it did reverse. Then I attempted to get back in when I saw that we were coming back up. I saw we had a little pullback. I saw it was sustained. I decided to get back in here at 42.77. But then this trade, I actually got stopped out at my target. Now my target was too close because really I should have put my stop target here. But I'm thankful I got stopped out because it allowed me to get back in later. So I thought, okay, we have to be done flushing down right now, which was my mistake. I should have really just sat back and been more patient. So then I got in around 42.69, and I let that trade. That trade was actually up. It was up about almost 9 points. I let it go to break even because my plan was I wanted to hold my winners longer, right? Instead of getting out, taking partial profit, getting back in, I wanted to see if I could hold. But what I didn't anticipate was the conditions that we were going to have today. So what I really should have done was I should have taken profit and then got back in. So then here I attempted to go short, and the market just reversed kind of quickly and came back down. So these trades were pretty much a couple small losses. So this part of the session would be 8:30 to 10, and this was a D. I was trading my normal 4 micros, and at this point I was at a $225 loss. I didn't cut my losses quick enough. Now we're into B session, which is 10 to 11. And this session, I took a bunch of random trades thinking that, okay, we're definitely going to, that my thesis was going to hold, that we were going to reverse up. And we started to reverse up. And again, I let myself get stopped out at break even. So I had another scratch trade here. I really need to like, I know that the market has lack of continuation at times and lack of follow through. So I think I just need to trust my intuition and what the chart is saying. Not my intuition, excuse me. I need to trust what the chart is saying, that listen, if it's starting to reverse, like this is a serious bear bar down, I need to pay attention to it, right? So then I thought, okay, well, maybe we're gonna go back up. But I didn't give that reversal enough time to set up. We took another leg down. I got stopped out. Then I got stopped out a couple more times. So in this session, where we're in B session now, we're at 10 to 11 a.m. I'm going to give myself a grade D for that one. Because of my long bias, I missed the setup that was happening on low volume. So let me just flip to the beautiful chart here and I'll show you. So I completely missed like this setup that was occurring. So you see this here where there's this kind of wedge up. Anytime you see that, and then you see like this sharp hammer, and then you've got this candle, which is like a shooting star candle, where it's a pretty strong bearish reversal candle, that means we're going to have another leg down. And I should have seen that occurring, but I didn't. So I basically created another loss for myself, a needless loss. So now we're in C session, and that is 11 to 1 p.m. And in this session, this was a good session for me. I give myself a B. I was trading slightly smaller. I wasn't trading the 4 micros. I was actually trading 3 micros at this time frame. And I got in on the right side of the V. So if you see here that you'll see like the market kind of forms. Oh, this is not a good color. Let's do this. Okay, so you see here where the market's kind of forming this V. So the right side of the V is when the market has started to reverse and now price is moving up in a favorable direction, right? So this area was, let me go over my trades in that area to tell you exactly. That was my best performing session. So I got in at, let me see here. I got long at 42.58 is where I got long. I got long at 42.58.75, which is right. That's where I got stopped out. 58. Right here. So I got long at 42. I got long at 42.58.75 with 2 contracts. Then I bought another contract at 42.63.25. Right about here when I saw we were going. So my plan was to hold this trade and hold it until we at least got back up to 42.80 to see what the market would give me. I was in break even at this trade. There was no loss happening. And this trade, I'm really happy to say that I held this for 20 points. So this was an amazing trade. It just keeps on going up. I held it through this level of consolidation here between 11.39 and 12.28, where I worked out. I checked all my emails. I did like 5 other things to distract myself so I wouldn't touch this trade, because at this point I had a I knew where I was going to get out had it start reversing, but it was working. So I sold one contract at 42. I think it was right. 42.80 was where I sold one contract. And had I realized that FOMC was coming up, I would have closed my entire position, right? So I saw this huge spike And then I got happy, but I got really nervous because that spike occurred in less than about 19 seconds. Then we had another spike. And I was like, holy crap, I'm going to lose all of my money that I've made. So, right here at this point, I was up $225 and my net loss was only about $130 for the day, which was fine. But what happened was I went on tilt when I saw the FOMC surprise that I completely missed, and I created a dumpster fire with my trading. So I massively overtraded. I didn't keep myself in order, and that's kind of what went down. So Lance Brightstein, he also says that when you when you trade, you want to create a 3-2-1 takeaway. And the 3-2-1 takeaway is really important for you to be able to progress. So my 3 highlights were I was really proud of myself for holding my winning trade very well. I stayed focused. I kept my mental game together while holding through pullbacks, which I don't normally do. And I did well in spotting the right side of the V, my opportunity to get long and stay in that trade. Now, the 2 lowlights were I didn't cut my losses quicker, and I let my profits kind of run away from me on moves that were changing directions. So when a trade was going from bullish to bearish, I should have just taken my profit even if it was slightly reduced. And the second part was over trading. I really need to work on not going on tilt and over trading. I don't know what came over me that I just started revenge trading at the end of the day when everything was going well. Like at the end of the day, I still wasn't going to be in profit, but I had minimized my loss. I had a great winning trade that happened because I worked on my mental game and decided to hold my trade. So the changes that I need to make is I've decided I'm only going to take 3 trades per session, and I will also stick to a max loss of 200 for the day. When I hit that, I'm done. But I think by reducing my trading down to a max of 3 trades per session, it's going to help me work on over trading. So really my goal is to work on over trading and to also work on holding my winners longer. And the thing is, in the market's been here for 200 years. There's always going to be opportunities. You don't have to try to catch every move. And the biggest thing is that you can't be so hard on yourself when you make mistakes, because I've made a lot of mistakes. But the thing about it is you just have to try to get better. So I hope this recap today was helpful. It's been a day, so I think I'm going to have a glass of wine, and I think you guys should too. So thanks for watching, and please, if you like this, please like and subscribe to my channel. Thank you.